All right. Oops. So if you had your email open, you would have seen that I just sent a quick email this morning. Well, two really, but this is the first one I want to talk about is this vaccination document. So this is, this is not really related to our class as such because we won't be meeting in person. We are, online synchronous. But you guys need to check your schedules, or if you haven't done so, or listen to whatever your professor is saying for your other classes, because there is a requirement for classes that are marked as hybrid or in person, that by Monday, September the 27th, you must have uploaded your vaccination documents into CUNY first, in order for you to be able to continue in the class. Because by October the 7th, those classes are going to, whatever in-person component relates to that class. So whether it's hybrid, where you maybe only go in for, one out of two sessions or whatever, or in person, where you're supposed to be meeting in person all the time. By October the 7th, CUNY Central, which is not LaGuardia, it's not the school's determination, it's it's higher up at CUNY. They have indicated that any students that have not uploaded vaccination documents by October 7th are going to be unenrolled, which is basically, I think, a soft way of saying dropped from the class. So you may have heard this. If you do have classes that are in person or hybrid, obviously everything's happening online right now, but you may have heard your other professors saying to you that you need to upload your documents. This is not a drill. This is real. This is stuff that you probably have maybe seen coming through your email. And if you haven't paid attention to it up to now, please start paying attention immediately, because by Monday, this needs to be done if you haven't done it already. And this is not me. I just want to be clear. I'm not mandating people to do anything. This is not coming from me personally. I'm not really interested in having any discussions around whether people want to be vaccinated or not. That's irrelevant. What's relevant is that in order to continue with any in-person or hybrid class, there's a requirement to be on the campus that you have to have vaccination documents uploaded into the system. All right. So, if you have been vaccinated and you have your documents available, please just get this done. All right. If you can't find that crazy white card that somehow the CDC thought it was a good idea for us to carry around, a flimsy piece of paper that we would lose in 5 minutes, there is the app called the Excelsior Pass, NYS Excelsior, for New York State. I've used it. Basically, I put in my name, I put in my date of birth, and I put in the date of my last shot, and they just pulled up the vaccination information without me even having to go and dig around for the white card. So you could try to use that and see if that might work for the upload. If that doesn't work and you lost your white card, in my class yesterday, someone said that you can go to any vaccination hub and they can actually give you another white card, because your information does exist in the system. Okay, the white card isn't the only record of you, being vaccinated. It's just that some people have since lost it, so you need to get it. If you don't know what to do, like how to upload, that's fine. If you want to watch a video on how to upload because you don't have time to speak to anybody, this is the link for the video. If you actually want to speak to a human being to help you do this, there's synchronous remote support, meaning there will be an actual person, a student technology mentor. Today it's happening at 2:15 via Zoom. It's also happening next week, Monday. I'm assuming they're probably going to allow people to still upload for the rest of the week. So this is the link for that. If you need in-person support for whatever reason, you think you need to be in touch with a live person, not someone on Zoom, the Bursard Lab is supposed to be helping people in C111. So if you happen to already be on campus or whatever the case may be, you can email this email address. I think that it's maybe by appointment, which is why they are telling people to email first. I don't know if you can just show up to get help. That wasn't clear to me from this email. This is not me generating this email. I'm taking it from, from somewhere else, and that we were asked to share it with students. So I guess the bottom line here is that these documents need to be uploaded. There is support to help you upload it. And at this time, CUNY Central is saying that people will be unenrolled if they have not uploaded documentation by October 7th. I don't know if that's actually going to be the case. A lot of things have been, kind of communicated as they happen. So please watch your email inboxes, your live at LaGuardia email inbox account. Watch my LaGuardia to see for anything that might be an alert on something to do with vaccination documentation. But guys, again, like I said, this is not a drill. This is not, something to be taken lightly. The college, the City University of New York is speak pretty firm on the fact that these documents have to be uploaded. All right. If you are not vaccinated and you wanted to be vaccinated, but it's just something that hasn't happened up to now, again, I'm not telling anybody to do something that they don't want to do. I don't want to hear later that, Professor Francis said we have to be vaccinated. That's not, that's your personal decision. But this is just to say for people who are now in panic stations and saying, oh my word, I knew I should have just gone for the vaccine. I've been postponing it and now I may not be able to attend classes. Today, Thursday, September the 23rd, today, per the CUNY guidelines, is the last day that someone could get the single shot Johnson & Johnson vaccine and still upload that information into the system and be able to join classes that will start running in person from October 7th onwards. So I repeat, if for some reason you procrastinated or something happened or blah, 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 it doesn't matter at this point, you still have today, if you need to, if not need, but if you wanted to go and get vaccinated in order to still make this October 7th deadline, the guidelines from CUNY is that if you get a single shot Johnson & Johnson by September the 23rd, you are still eligible to continue with in-person classes starting on October the 7th. I see some questions, but how long we can attend, I will be available. Sorry, I let me see. There's a few. Good morning. I'm sorry. Okay, that's fine. I thank you, Denise. I know Michaela told me you're having problems. Professor, are you aware how long we can attend class online? Will it be available for springtime? Okay, I understand. So question about how long online classes will persist. What was the name of that app? So the name of that app is NYS New York State. Let me just look for it on my phone. So I did my vaccine also, because we had to do it for LaGuardia at one point. So NYS Excelsior. Gosh, like my brain is a sieve. Excelsior Pass. And then you get something, I don't know if you can see this, oh gosh, the green screen is causing problems, but you get something that basically shows that you were vaccinated. It shows your date of birth and it shows when the pass expires. Mine expires on February the 20th. That doesn't mean that the vaccine expires. It just means that they only, this one pass needs to be renewed at that point. Now, how long will classes continue online in the springtime? Yes, there will be classes online in the springtime. At this time, CUNY is pushing for classes to also obviously happen on campus as well. So I can't tell you how long you specifically will be able to attend classes online, because it depends on which classes you still have to take and whether those classes that you want to take are being offered completely online, if that makes sense, Jahome. So what I would recommend for you is October the 15th is, and so I'll write it over here. So spring registration begins on October the 15th. Why am I saying that? Because if you want your pick of classes, meaning you want to be able to choose exactly which modality you're in, you want to be online or whatever the case may be, I would highly recommend that you start trying to register for your classes as soon as your registration opens. Sometimes people's registration, by appointment, I mean when you are able to register online, not an appointment with an actual person. But sometimes that is a little bit after the beginning of registration, but it's sometime in the middle of October, you're going to be able to start looking at classes for spring. And if you want to remain completely online because, you're working now or whatever the case may be, you can't come to campus, you need to hustle and choose the classes that you want to take and make sure that you can get it online, because once the classes are full, the online classes will not be what we call over tallied to put extra people into it. You will be put in a situation where you will have to come onto campus. I'll be back on campus in the spring. I mean, obviously, I don't expect anybody to retake this class. Everybody should be passing this class, but faculty are aware that at least one of their classes, if not more, they will be teaching in person. So I'm teaching 3 classes, 2 of which will be in person. So I'm just giving you an idea of what's happening. I think this CUNY is saying about 70% of classes will be back in person and about 30% will be online. Will we graduate online or in person? It's too early to say, John, because, I think the City University of New York really wants graduation to be in person. Or even this last graduation, they would have hoped to be in person, but it depends on the movements of the virus at that point. It depends on the caseload in the city. It depends on available venues that are preferably outside. And if those venues, are already booked up because other things had to be postponed year over year, and we're not able to get a venue. For instance, I'll be more specific. In the past, we've had graduation at the Javits Center. The Javits Center is completely indoors. Which then, creates a situation where that's like, is the ventilation okay? It's so many people in one space. You can't necessarily, maybe they'll, do vaccine mandates for everybody who comes in, but it's a lot to think about. So since it's only September now and graduation is in June, I say what's going to happen. It's very sad that people have to graduate, remotely. I've attended so many graduations at LaGuardia. It's a glorious day. I normally end up in tears because I'm so happy for the students. The students are happy, the family is happy. So I hope that it comes back. We just don't know because we don't know.
I thought the LaGuardia graduation was at the Barclay Center.
Oh, it's been at many places. It's been at Javits, it's been at Barclays, it's been at Queens College, it's been at Radio City Music Hall. It just it's changed. But Barclays Center was one of them. I remember because I went to Shake Shack after. So I remember that.
Excuse me, Professor.
Yes, sir.
Is it okay if I be excused for class today?
Oh, yeah. Yes, and please feel better and monitor your head.
I am dealing with this whole insurance company and everything is annoying me even more.
The insurance company is making your head worse. I can imagine. I'm so sorry this happened. Please feel better. I don't know if you heard anything I said about this vaccine thing, but just look on the announcements later. Please make sure that you upload your vaccination records if you have a class that has to go in person or hybrid. Okay.
I don't plan on getting vaccinated. You see, that's a scary
So
part.
if that's the case, and I mean, you don't need to tell me that if that's your decision, but just know that CUNY has stated fairly point blank that if you have classes that are going to meet in person,
You
or
have to
that
get
should have been
vaccinated,
in person or hybrid, that people who do not have vaccine records on file will be unenrolled from those classes because it's a vaccine mandate for students. So I want to just make sure that people in my class, although this doesn't apply to us, but I don't know if anybody else has spoken to, to the students. I just want to make sure that you guys understand that come October 7th, if you have a class that is written as in person or hybrid, that you could be dropped from the class. All right. If
All right.
CUNY does what they say. All right. So feel better. I'll see you next week, Tuesday.
All right, thank you, Professor.
Bye.
Wait, question: is the recording is gonna be up, right?
Yeah.
All right,
I'll put it up. Okay. All right, Anissa.
Hi, Professor.
Hey.
Yes. So I think I forgot my question already.
It's okay.
I forgot my
You-
question.
You
Okay, when
can,
it comes to mind, I'll
yeah,
let you
no
know.
worries. All right, guys, any other questions on this uploading vaccine documents or being dropped from a class if you are not vaccinated or not vaccinated, but if you don't upload your documents? Anything else?
Professor,
Yes.
for this semester, I'm taking only online classes. I got vaccinated, but should
And
I
are they,
up?
listen, let me ask you this. Are they definitely online? Like it's not online hybrid or it's fully online, right?
Fully online?
Okay, that's fine. But what I would say
That's
is
like,
if, for safety's sake, because you may want to register for in-person classes for the spring, just upload your documents anyway, because you may be blocked from registering for an in-person class in the spring if you don't have your vaccine records in the system.
okay.
Make
Yeah,
sense?
okay, perfect. Thank you.
Yes, Denisa?
Okay, yes. So I am planning to get vaccinated because I just started a new job and they're requiring the vaccine. So I'm trying to get vaccinated this weekend, but will that still be past the deadline if I'm trying to take classes for spring, or
Okay.
is it just for fall?
No, I think you're fine if you're trying to, if you don't have any classes that need to meet in person or hybrid for the
No,
fall. Yeah, no,
no.
then you're good. The only, you're good. You get vaccinated the weekend, get your stuff going, for loading up so that by the time you want to register come October, that there's no issue in the system for you being able to register for classes that are hybrid or in person. But this
Okay.
specific, very strict deadline applies specifically to people who are already in a class in the fall that is
Okay.
actually marked as in-person or hybrid, because those classes are required to start meeting on campus from October the 7th, and people who are not having vaccination documents in the system will not be able to come onto campus.
Okay.
Students, I mean. Okay?
Okay.
Okay,
Thank you.
no problem. Anything else, folks? Sorry,
Professor, I have one
yes,
more
sir.
question.
Mhm.
I already uploaded my vaccine, and then I received an email from CUNY, and it says that you are cleared to enter CUNY site. So that's the only thing they wanted to have me, right?
So I know that, yes, you did the right thing. You've uploaded and you're cleared, but I do know that when you have to go onto campus, I think there is something called cleared for. It's like this. I'll show you. I don't know if it's going to be a separate uh it's not an app, it's like it's a website that you have to kind of bookmark that you will show every time that you are cleared to enter. Let me ask someone who knows, because I mean I don't know for sure what's going to happen on October the 7th, or from October the 7th, if they're going to be looking for students to just bring their cleared for pass, or if there's extra stuff that students need to do. In fact, I may even just watch this video myself to see if the video doesn't maybe say what has to happen. So let's hold your question, Jason, and as soon as I know what the process is after you've been cleared by uploading your documents, I will email you or email the class. All right?
Okay, thank you.
Okay, no problem. That it? Any other concerns that anybody has? Okay. So if you didn't know, as the saying goes, right? My husband had to teach me the saying when I moved to America. If you didn't know, now you know that CUNY is not playing with this vaccination story. So if you are already in an in-person class or hybrid class, which you can see on your schedule in CUNY first, if it's listed as in-person or hybrid, you will be dropped from the class if you don't upload vaccination documentation by September the 27th. Between September the 27th and October 7th is when CUNY is taking the time to verify people's documentation. And then as of October the 7th, classes that meet from that day onwards in person, if you are not cleared to enter, you cannot join the class. All right. So that would be catastrophic for people who are trying to graduate and so on. So please make sure that you are in compliance. And again, this is not, me telling people whether they should get vaccinated or not. That's up to you. Personally, I have immediately got vaccinated when it was available because used to live right close by Almas Hospital, and the amount of sirens and things that I heard going and the amount of death that I've experienced around me, I was like, I'm getting vaccinated. But it's everybody's personal choice. It's just that the rule from CUNY is to be in a class, you have to be vaccinated.
That's it.
All right.
I got vaccinated when it first came out and everything. My question is, I don't know how to upload it. Like the
Yeah,
actual-
that's why you go and see here all the stuff that I just said. You watch this video or go onto Zoom today at 2:15 if you can. I know you said you're working, so I don't know what your hours are, and you can also go onto campus. But I mean, going onto campus to upload your vaccination documentation is difficult because in order to even get into campus, you have to have proof of being cleared to enter campus. So
Can
it's a
you
little
show
bit of-
the cause I have the Excelsior thingy.
Yeah, so you have the Excelsior. So I just watch this video for me. Okay, it's not long, and see if you are able to upload your stuff that way. Otherwise, just contact me and I'll try to see if I can put you in touch with someone who can help you. All right.
Okay, Professor, thank you very much.
Okay, but by this needs to get done by Monday. All right.
Okay, Professor,
please.
I'll definitely be doing everything today.
Okay, okay, guys. So today I have a conflict because I have to observe another professor teaching, and the only time that I could observe her teaching a class is today at 1 p.m., which also happens to be the same time as our office hours. So unfortunately, there's no Zoom office hours today. Not that anybody was attending the Zoom office hours, but still, just in case you were planning to attend it today, I won't be there. But feel free to email me. If you have questions today or tomorrow over the weekend, and then of course the office hours will resume on Monday. Michelle, you have a question?
Yes, I'm sorry, Professor. So
That's fine.
Maya was on earlier, but she got kicked out. She wanted me to just let you know that she's having a hard time.
Okay, so today is that day, hey, when people
Yeah.
are not able to get on. Okay, well, the class is being recorded, so if people
Okay.
are going in and out, I already took her attendance, so hopefully she can come back, but nevertheless, you're good. Thank you.
No problem.
Tanisa, are you still asking me a question or is your hand raised from before?
That's an old hand. I'm sorry.
It's an old hand.
Yes.
All right. Okay. Yeah, I got a question in the chat. Yeah, Rebecca is also having problems with internet. I don't know what's happening today. Rebecca, you're like the third person who's having internet problems. Maybe it's the wind, although some of the lines are underground. I don't know.
I called my provider all morning. They said that it's not them, but I don't believe that.
Who's your provider?
Spectrum.
Okay. Maybe it is them, but they don't know yet that it's them. That happens sometimes.
Yeah. So I might get kicked off again.
Yeah, I've
was-
been getting kicked off since Tuesday. I don't know what's going on, but I have Optimum and it's always something with them. There's like a love and hate relationship with them. So it's
Definitely felt
It's
that. 'Cause
annoying.
I got Optimum too, and I was having problems all morning today for my other class.
oh my goodness.
Well, what are we gonna do, right? All I can say is I'll keep my side of the bargain and record the class and upload it. And I'm so sorry because I know it's very disruptive for you guys that you keep getting thrown off this. On my side, there's not much I can do. And the internet service providers can sometimes be very unhelpful about the fact that the problem lies with them. Are you guys familiar with speed test, the speed test website? Because I'm assuming it's a speed issue that your internet is just not moving fast enough. So if you go to speedtest.net and you're connected to your Wi-Fi, you can actually test to see how many megabits you're getting up and down to make sure that it's actually in line with what you're supposed to get. When you're off the call, you could maybe look at rebooting your modem or something. You could also look at getting some Ethernet cable and plugging it into the back of the modem and plugging that into maybe via dongle into your laptop or something so that you're actually on a wired network instead of just Wi-Fi, because often it's Wi-Fi that's the issue. that's about 3 or 4 ways that I think you may be able to troubleshoot your problem. Because like when you phone Spectrum or Optimum and they say the problem's not with them, but if you've been on, I think it's Speed, my husband always does this, it's Speed Test. Did I spell it right? Yeah, speedtest.net. Yeah, so I mean, I'm not gonna do it now, but you go on there and basically make sure you're on your Wi-Fi. And when you press go, it's gonna test to see how fast your internet is. And then you compare that to what the provider is supposed to be giving you. And so when you call them, you can actually complain and say, hey, I'm supposed to be getting 100 megabits down or whatever, and it's only like 50 or something. Maybe that might help. And again, maybe reboot the modem. But often a lot of the stuff gets resolved if you wire yourself to the modem. So if you can get Ethernet cable and actually just wire your device, and you'll see that you have a bit of a steadier stream. Okay, so sorry for the quick computer hardware and software discussion, but you know, we're going to be meeting online, and I would want people to participate, and it's hard when you get thrown off all the time. You lose momentum. Okay, so last time we worked through a lot of the partnership financial statement questions, and I had left one of the questions for today, which was the example 11 that was asking us to prepare an income statement and also to prepare the income allocation. Right, I said we'll just do it today so that we kind of still have partnership financial statements fresh in our mind. And then as soon as we're done doing that, we're actually going to go into partnership liquidation. Okay, so let's read here and see what's happening and how we can answer this question. Example 11, Waldorf Partnership has the following accounts. Service revenue, $100,000. Rent expense, $5,000. Salaries expense, $4,000. Advertising expense, $1,000. And utilities expense, $750. So a pretty basic income statements, right? Some revenue and then all these expenses, and we're going to calculate these together to get to net income. And then it says partnership income and losses are shared 70% or 70 to 30, which means 70% between the partners. Wall, so Wall gets 70% and Dorf gets 30%. Wall and Dorf are entitled to salaries of $8,000 and $5,000 respectively. So we remember from Tuesday that we said when it comes to income allocation, we always allocate the salaries, and if there's interest, any interest first, and then we allocate the remainder based on whatever fixed income ratio is being given. All right, so I'm going to go back into, this page that I've been using all along. Remember, this is the Google Doc. And
Sorry,
if you,
Professor.
yes, hi.
I didn't catch the screenshot for the question.
Oh, okay, no worries. Let me, there.
Okay, thank you.
And remember, if you actually want to have it for yourself, so you don't have to worry about me toggling, you can just click on here. If you go into Blackboard under Zoom meeting materials, it's the same document that I'm working on, right? So example 11. Oops. And so it's the, as usual, it's a financial statement, so we can write the name of the company. So it was Waldorf, Waldorf Company. Yeah, good, that's right. Yeah, it's an income statement, and an income statement is for a period of time, right? For the year ended December. Am I making up stuff? Did it say anything about December? Oh, it did. No, it didn't. Yeah, December 31, sorry. December 31, 2018. All right. So that's just the heading. Again, okay, sorry. That's my own message that makes the pattern. Normally in Wiley, the stuff is populated anyway, so you shouldn't have to worry. Just sometimes, like I said before, sometimes they'll test you to see if you remember that it's either for the year ended or at a point in time. Okay, so the first thing that you have to deal with is revenues, right? We put the kind of the good news first, right? So if you we can do a heading for revenues, but it's not really necessary because it's only one number. So revenues 100,000, right? And then instead of writing the word expenses out a million times, we can just put a heading for expenses and then we just list the expenses. If you want to be really, I guess, proper, you list the expenses in order of size from largest to smallest, right? That's all the stuff from, accounting one. So I'm literally just copying all these expenses down and putting them in the format of an income statement. So it's going to be rent for 5,000, right? So I'm putting this over here because we're going to subtotal all the expenses and then put that amount into the right-hand column. So it's rent, salaries, is 4,000. Advertising is 1,000. And utilities 750. And so all of those together, we add them together. And we're going to come out to 10,000. I'm just going to type it in 10,750, right? These numbers together are 10,750. And so what we do now is, again, very simple. We say 100,000 minus the expenses of 10,750 gives us a net income of 89,250. So that's the amount that we're going to split between the two partner systems.
Professor, so I have a question. Why is the 100,000 is on the other side? Is that the credit side?
No. So thank you for asking that. Financial statements don't have debit and credit columns. They're just, it's just basically total and the numbers that make up a total. So this column over here is not the debit side and this is the credit side. It's just that these numbers are here because if I list them all one by one under the 100,000, people could start getting confused and thinking that we should add them all together or they have to subtract them one by one. So instead, I just add all these similar, the items that are similar. So they're all expenses together and just put the total here to keep it kind of neat and clean. And someone can just say, oh, 100,000 minus 10,750. That's how I get to net income.
Got it.
So thank you for asking that. There's no debits and credits in being shown in the balance sheet. Anytime you see two columns, it's literally just two columns.
But revenues generally are being credit.
Yeah,
and
but
expenses are being debit.
Yeah,
no?
but that's true. And that is not what we're doing here. Because if that's the case, then the 10,750 somehow appears on the debit side and the credit side, right? Which is incorrect.
Oh, okay, yeah.
So yes, both things can be true. Revenues are credited to increase the account, expenses are debited to increase the account, but in financial statements, the left side and the right side do not represent debit and credit. They just normally represent a line of numbers that are going to be subtotal to take over to the total column. All right. Thank you for bringing that up. These are good questions. Any other nice questions, brain teasers? Nope. Okay. So that's the first part, right? The A part was asking us to do the income statement. The B part is asking us to do a division of net income, right? It says, where am I? Prepare the schedule of partners' income allocation, show it below the income statement. So we're just going to, you can call it division of net income or something. If it was being shown under the income statement, there would have to be some type of heading, right? And then we're going to do the same thing that we were doing before. We put the partner's name. So you've got Wall and you've got Dorf and you've got a total. You probably remember this from last time. And remember then we have to put the salaries in first. So the salaries of 8,000 and 5,000 respectively, given in the question. So we're gonna put salary. You can put salary allowance if you want to, but since they just call it salary in the question, I'm not going to bother with that. So it's 13,000 total. Now, how much do we have to allocate this, right? 89,250. So remember, you can't allocate more than this. You also should not allocate less than this. So already you've allocated 13,000, which means you still have 76,250 to allocate. That's the remainder. So I'll just show the calculation for the remainder here again. So the remainder is 89,250 minus 13,000. And that equals 76. I have to keep the 250, so this is getting a bit longer than that. Let me just try. All right, so that's the remainder, 76,250. So it's 76,250 that is going to be allocated between these partners. And the question tells you that the allocation goes 70%, 30%. So we will do wall. It's going to be 76,250 multiplied by 70%. And that is going to come out, if you check my math, it's 53,375, right? And then Dorf is going to take the remainder, also 76,250 multiplied by 30%. And so that will be 22,875. And these two numbers together will give us the 76,250 total. And so now we can sum up everything and make sure that we did this right. So Wall is going to get their salary plus their portion of the remainder. Dorf, I should have just said. Okay, Dorf is the same. And then over here, you've got the 13,000 plus the 76,250. So the numbers check out because these two numbers have to be the same. So this question is taking you through the income statement and then having you allocate that net income using a salary allowance and then a remainder that is split at 70%, 30%. Anybody have questions on this?
I have a question on
Yeah.
that. I'm still a little bit confused on the income
Go
statement
ahead.
because there was a similar question in the homework. And there was revenue and cost of goods. And the system required to subtract.
Yeah, that's a multi-step income statement. Yeah.
Oh, okay. Because I thought we just needed a list like you just did. But in the
So cost of goods sold is an expense. So sorry, I feel like I cut your word. Finish your thought. Sorry.
No, it's okay. Yeah,
Okay.
like because there was also other expense. So I
Yeah.
said maybe I have to put both of them.
So you
at-
had something like sales, cost of goods sold, other expenses like that, right?
Correct.
I mean, I'm just spitballing at
Correct, but
those
this-
types of things.
Yes, but the system require to subtract the sales from goods sold.
Yes,
And it
yes,
says
to
gross
get to gross
profit.
profit. Yeah, absolutely. That's a multi-step income statement. I mean, I don't expect you to go back to chapter 5, but this is from accounting 1, chapter 5. Sales less cost of goods sold gives you gross profit.
Yeah.
Then
I
you do
remember
the other expenses, and then that number, I mean, depending on how involved you get, it's going to be income from continuing. Well, you guys don't do discontinuous, it's just going to be net income after that for accounting 1. So it's a multi-step income statement. Maybe you did other gains and losses or things like that, which would be can also factor in. But I think the question in the homework is just sales, cost of goods sold gets you gross profit, then there's other expenses, right? I don't think there's any other gains and losses or anything like
Correct.
that.
It's
Yeah,
just extra expense and that's it. But
okay,
yes, you're correct. And chapter 5, it does say that we need to get the gross profit
Yeah.
if it's good of sales. Okay,
multi-step.
now I got
Mhm,
it.
mhm.
Yeah, I remember
Yeah,
now.
this is just this is a simplification. It's a single step income statement for a service company that is not selling goods, so it doesn't have a cost of goods sold.
Okay, I just wanted to ask because it took me a little while in that homework and that step.
Yeah, you
Thank
can
you.
always ask. And if you get stuck on something like that and you feel like you're spending too much time, people often just shoot me an email and ask what's happening here with a
Okay.
picture or something.
Thanks.
All right, no worries. Anything else, guys, before we move on? Okay, so we've covered partnership formation, we've covered partnership financial statements and income allocation. So the last thing to do is liquidation, and then we're done with this chapter. And for liquidation, I'm gonna go back to the notes. Again, the notes are also in Blackboard. So you can look on Blackboard if you want to download the notes. So liquidation, as you can imagine, I'm sure you've seen liquidation sales, especially, you know, in COVID times, many companies have gone out of business. So liquidation is when you're basically selling everything and getting out of the business, right? And you may recall when we went through the theory around partnerships, we spoke about how a partnership it doesn't have an unlimited life. It's a limited life because it can end if a partner, decides to withdraw, if a partner dies, if another partner joins, then you kind of have to end the previous partnership and start a new one. The partnership could go bankrupt. The partners could just agree that they're kind of done with the business and they want to be out of it. So that can also end the partnership. Very different from a corporation that has stockholders that is expected to continue into perpetuity, right? It's expected to be a going concern. So when we're dealing with the liquidation of the partnership, you're thinking about you're ending the partnership, you're trying to get rid of you're selling all the non-cash assets. So any asset that isn't actually cash is being sold. All the liabilities will have to be paid off, right? You have to settle all your debts and you always have to pay the creditors first before you can, you know, pay yourselves or the partners can pay themselves. This is just normal life, right? If you owe money on your credit card, the credit, if you suddenly declare bankruptcy, the creditors are standing there to get their money before you can take any money for yourself. So it's the same for business. So they have to sell up all the assets, they have to pay off all their debts. And if there's a gain on the sale of any of these assets, they also have to split that between the partners in their income ratios. If there's a loss on that sale, that also has to be split. And then finally, we calculate how much is left in each partner's capital account, and we actually pay them out the cash. All right. So it's happening in 4 steps. We sell the assets, we see if there's a gain or loss. If there's a gain or loss, we have to split that gain or loss between the partners based on their income ratios. We have to pay off all the partnership liabilities, and then anything that's left over, right? Any remaining cash is going to be split, not based on the income ratio, not based on, hey, I want more than my fair share, whatever. It is literally based on whatever is left in their capital, or not left, but calculated in their capital balance. It's just like if you go into the bank and you decide to close your bank account, you don't want to deal with this bank anymore, they're going to pay you out whatever is left in your account, right? They're not going to say, oh, but you earn, $1,000 a week, so we're only going to give you $1,000. They're going to give you whatever is left, and then the account is closed. This is what's happening with the partnership. All the accounts are getting closed. So by the time we are liquidating the partnership, they're no longer generating revenue. All those things have happened. Any net income that was there for the year has been transferred over, to the partners. Any drawings accounts have been closed. So basically all the temporary accounts are closed and we're just left with balance sheet accounts, right? We're left with assets, liabilities, and partners capital as equity accounts. And those are the accounts that we will have to basically close as we liquidate the partnership. And when you close the account, so this is going to feel a little bit weird, but when you're selling the assets, remember assets have normal debit balances because they increase on the debit side. But if you're going to get rid of the asset, you will have to credit the account, okay? Because you're trying to make the account zero. Liabilities have normal credit balances, but if you're going to get rid of the account, you will have to debit the account to get it down to zero. So you're closing out these accounts. So I don't want people to get a shock when we start doing the sale journal entries and asking, why are we suddenly crediting assets and debiting liabilities? Does this change everything? Are we in some like alternate universe? No, we're doing that because we're closing out the accounts because the business is ending. All right, so watch out for that. And so what we're going to do now, because it's easier seen in practice, is that I'm actually going to take you through examples of how to do the liquidation. And I just want to give a heads up, okay, that these steps for the liquidation have to be performed in this sequence, meaning you can't just decide that you're going to do the distribution journal entry first and then the sale entry and so on. It won't work because you have to sell the assets in order to see whether there's a gain or a loss. You have to allocate the gain or the loss. You have to pay off the liabilities and then distribute the money to the partner. So they have to happen in that order. Additionally, there's a journal entry related to each one of these steps. Okay, so there will be journal entries at every point of the liquidation process. So you can kind of even monitor your work and see, are you doing this correctly? Because every time something happens, there should be a journal entry to record it for the liquidation. Questions on the theory of liquidation before we go and do an example? Or start an example and then take a break. All right, so I will assume that silence is consent to continue with the example. So the liquidation examples are 12 and 13. They're, the last two examples on the sheet here. And I'll do both of them with you because I just think that the liquidation can be a little bit tough to follow. That doesn't mean that you need to zone out or anything while I'm doing this. Try to see if you can work along with me. All right. So Farley, Green, and Hall, so 3 partners, right, who share income and losses in a ratio of 5:3:2. So when you look at this, you're saying what's going on here? Well, if you add these numbers together, they make 10. So 5 out of 10, 3 out of 10, 2 out of 10, which also means 50%, 30%, and 20%. Okay, so those are their ratios. So you can either say 50% or you can say 5/10. It's going to be, the same answer. You can say 30% or you can say 3/10. And where's the 10 coming from? It's all the numbers added together. That's the total of the pie, right? The pie itself is 10 out of 10, and each person is getting some portion of that. So either way, whether you want to use fractions or whether you want to use a percentage, that's the income and loss ratio that they are sharing stuff on. On April the 9th, 2018, the partners decide to liquidate the partnership. So there seems to be a mutual agreement liquidation. On this date, each partner has a capital balance of 22,000. So they've made the question kind of easy for you because each person has exactly the same balance. That is not the balance that we are distributing at the end. That's just the beginning balance in their account before we've done any of the liquidation journal entries. Okay, so please be aware that when they say it's 22,000 at this point, nothing has happened related to liquidation. That's just what the partners add in the accounts. The partnership has cash of 11,000. So I know you're gonna chuckle at me or you're gonna think I'm corny or whatever, but I will ask this question because I've seen people do this in the journal entry. Can you sell cash? Can you sell cash?
No.
No, right?
Oh.
Cash is cash, okay? So if you have cash on hand, when we do the journal entry to sell assets, cash cannot be part of the assets that we sell. Because if you're selling 11,000, you're going to get 11,000 and you would have wasted a whole lot of time trying to sell money for the same amount that it's worth. So cash is not something that we are concerned with when we are saying sell non-cash assets. And I know it sounds insane, but like I said, I've experienced this when the students start to make the journal entry, they put cash down as a non-cash asset that needs to be sold. That's not true. Inventory, yes, inventory is a non-cash asset of 30,000. It will need to be sold. Equipment of 27,000 will also need to be sold. Accounts receivable is 7,000. That's also a non-cash asset that has to be sold. We've got accounts payable. This is not an asset, it's a liability. So that liability is going to go into step 3, where we have to pay off the partnership liabilities. And then all non-cash assets are sold for $72,000. What they're saying here is that the inventory, the equipment, and the accounts receivable were all sold for the sum of 72,000. So we will be able to see when we do the journal entry whether there was a gain or a loss on the sale, and that gain or loss has to be allocated between the partners in this ratio. All right, so that's kind of the background of the question. You can see that you have to know the rules of how to tackle this problem in order to even know where to begin on a question like this. All right, so prepare the journal entries required for the partnership liquidation, and then prepare each partner's capital account showing all relevant transactions. So not only do they want the journal entries for the liquidation, they also want us to post to capital accounts, basically a ledger, which we can use a T account to see how the partner's capital accounts end up. Spoiler alert, everything's going to end up on 0, okay? Because the partnership is over, but it's just getting to 0 that will take those 4 steps that we were talking about. So I'm going to go in here and I will maybe do the first journal entry, and then we can take a break. Oh, see, what's up?
So all the non-cash sold will be the realization?
Yeah, that's you're realizing the amount of the non-cash assets. Yes,
Thank you.
no problem. All right. So we're going to make the first journal entry. The first journal entry relates to the sale of non-cash assets. Remember, I'm going in order. Okay, for gain or loss on realization. Realization and sale, those words are kind of interchangeable in this example. So I know I'm receiving cash of 72,000 for the sale of these assets. Please note that the $72,000 of cash has nothing to do with the 11,000 that's already there. It's like you're saying you have 11,000 cash in the bank and now 72,000 is being added to it, right? Which would give you a total of 83. But what you put in the journal entry relates specifically to this transaction. You don't have to involve the 11,000 because it's already been recorded in the past and there's a balance, that balance relates to previous transactions. So we're just going to debit cash for 72,000, okay, as the amount that was received for the sale of the non-cash assets. Now, here's where things get a little bit crazy because you're going to tell me, Professor, I know that inventory has a debit normal balance, equipment has a debit normal balance, and so does accounts receivable. So in a moment here, I'm going to try and make that balance zero. So I'm going to put this here as an example of why I'm going to do what I'm doing. Right? Because you already know I'm super extra, so I'm going to explain something a little bit maybe more than necessary, but here goes inventory. Okay, so it's debit on the left, credit on the right. It's an asset, so the debit side is the side it increases. The balance is 30,000. Okay, that's where we stand at this moment. We are going to be selling this asset, which means that at the end of the transaction, the inventory balance has to be a big round zero, right? So what are you going to do if this is the plus side because it's an asset, right? And this is the minus side. I have 30,000 plus and I need to get to zero. It must mean that for the sale will have to be a credit to inventory, right? I have to credit the account to get it down to zero. And the same thing applies to every other one of these assets. They have debit balances, and in order to sell them to get rid of the account to get the balance down to zero, we will have to credit those assets for the sale. Okay, so remember what we're doing. That's why we're doing it. We're crediting not because assets are suddenly going up on the credit side or something like that. It's actually going down because of the sale. The inventory was 30,000, the equipment was 27,000, accounts receivable is 7,000. I'm taking all these numbers straight off the question. So now I have to ask myself, does this journal entry balance? What do you guys think? Is it balancing? What do you see here? 64,000, not balancing, right? Not balancing. I got 72,000 on the debit and only 64,000 on the credit. In order to balance this account, I have to plug, right? Plug or solve for the difference is 8,000. What does that difference represent? See, sorry, do you have a question for me? Sorry, I just saw your hand was up.
No, it's okay. Thank you.
Okay,
So
okay. So the 8,000 is there hanging around. We know it has to be on the credit side, but we don't know what it represents, right? So here's the deal, here's the rule. A gain is a credit. So you can either call it gain on realization or gain, let me make it easier language to follow, gain on sale, okay? So if it is a gain equals a credit, and a loss equals a debit. So a gain is almost like revenue that goes up on the credit side, and a loss is a debit. Okay, so I know that it's a gain because of that rule. So if you do a calculation like this, like let's say in the homework or something, and you get to realizing that there's still an amount missing on the credit side, it's going to be a gain. If the amount is on the debit side, it's going to be a loss. All right, and so now we're going to say to record sale of, I don't think you need to put narrations in Wiley, but I'm just putting it here in case someone doesn't know what we were doing. Okay, so to record the sale of non-cash assets at a gain. And so this gain, the 8,000, is what we're going to split between the partners using the income ratio 5:3:2. That I will do after we take a break. You can come back at 11:45. Okay. I'm here in the break if people have questions. Sorry, I'm just picking up my pen. 11:45, we'll pick it back up and finish this out. Let me know when I can stop the share.
so when you credit when you credit the inventory equipment account receivable, it's because you in exchange debit the cash, right?
Yeah,
Yeah.
and I mean, it's kind of a little bit more than that. It's the fact I'm crediting them because I'm actually reducing those accounts to zero.
Mhm.
I think that's to resume the recording. All right, so we just finished selling all our non-cash assets, which was, let's even put it here, right? It was step one of the 4-step process of liquidating the partnership. And what we found was that we had a gain on sale of 8,000. We found that by saying that the debit side was 72,000, but the credit side was only 64,000. So now it's step two. Oops, sorry. In step two, we are required to allocate that gain. Remember, we're just following this. Allocate the gain or loss on sale. Sale and realization is the same to the partners based on their income ratios. So we go back. I know you know this already, but just in case, that's going to be split 50%, 30%, 20%. So we just created an account in the partnership. Remember, the partnership is ending. So by the end of the partnership, we can't have any accounts floating around. So this $8,000 gain on sale will immediately now be eliminated on the debit side with a debit of 8,000, so that the gain on sale account becomes zero, and the gain will be split between the partners to their capital accounts based on the income ratio. So we've got partner Farley, we've got partner Green, and we've got partner Hall. Why are they being credited? Because again, is a good thing. It's extra money for the partners. So their partners' capital account is going up on the credit side based on the amount of the gain that belongs to them. We know it's 50% based on what we just read, 30% and 20% of the 8,000, right? So this partner gets 8,000 times 50%, so 4,000 obviously. This partner is 8,000 times 30%, and this one is 8,000 times 20%. So we've now given each partner their portion of the gain. Questions, anybody?
Yes, Professor. Okay, so I'm trying to see, how did you get the 4,000? Did you multiply the 8,000 by 50%?
Yeah.
Okay, got it.
Yeah,
Okay.
and then 30% and then 20%, exactly. What else? Other questions? All right, and so important to know that, again, you're eliminating the gain account as well, because you shouldn't be carrying extra accounts because the partnership is ending. So we eliminate the gain account, bring it down to zero, and give each partner their portion of the gain. So that's that step, right? And we don't have loss examples. I don't think there's a loss example in the homework either, but if it was a loss, it would just go the opposite way around. I'm not even going to go into that because we're going to waste time that we don't need to waste, and I'll probably confuse people if they're not already confused, right? So in the third step, we pay all the partnership liabilities in cash. So when we were reading the question, we saw that accounts payable was the only liability that the partnership has. So accounts payable, again, you got to know your fundamentals, of debits and credits in order to do these journal entries, because it gets a little bit tricky if you don't know, how the account moves. So accounts payable, here goes the debit, here goes the credit. Remember, it's up on the credit side for liabilities and down on the debit. So it must mean that we had a balance on the credit side of 9,000, right? We're trying to get this account down to zero because the partnership is ending. So the balance needs to become zero. I'm putting it on the side just because this is the normal balance side. So how do I go from plus 9,000 to zero? I have to minus 9,000, right? So when we pay the accounts payable, it must be a debit to accounts payable to get the account down to zero, and a credit to cash the asset cash is going to decrease, right? Because we had to use some of our cash to pay the accounts payable. So you have to know how the accounts work in the first place in order to understand how to eliminate the balance in the account, all right? So again, accounts payable, normal credit balance because it's a liability. In order to pay it off, you will have to debit the account to get it down to zero. The credit side of this transaction is cash because cash is an asset that goes down on the credit side. When you pay off your liabilities, you have to decrease cash. So accounts payable is my debit that I just talked you through, and cash is my credit. Questions on the liability payment step? All right, so we've done the first 3 steps. Let's see what the last step is. It says distribute the remaining cash to partners on the basis of their capital balances, right? So that means you're basically paying them out for whatever's left over. If you remember, when we read the question, it said that the partners have capital balances of 22,000, but I told you that those were capital beginning balances, right? That didn't take into account any of the, I guess, transactions, the steps, let's call it the steps that we just made, all right? So in step 4, what's going to happen here is we're going to decrease each partner's capital balance because we're paying it out, and we're going to decrease cash, all right? So what I'll do at the bottom here is start drawing capital balances. Oh, capital T accounts, I guess, is probably another way of saying it. I'll do one of them so you can kind of see how it works, and then we'll do the rest. So debit, credit, we're going to start with Farley, right? That's the first partner. We're going to start with Farley's capital. We know that capital accounts go down on the debit and up on the credit. So we have to remember our pluses and minuses. The question told us that the balance in the account to start off with was 22,000. All right, hopefully everybody's okay up to there, right? That the balance was 22,000. Now, what we have to do is go up and see if we did any journal entries that affected the Farley capital account in our 3 steps that we've already done. When we look at the first step, there's no capital accounts involved, but certainly in the second step, there was a capital account involved. We credited Farley's capital with a gain on sale, right, of $4,000. So remember, when you're taking something from the journal into the T account, which is basically like a ledger, you just copy and paste. Do not change the credit to a debit. Don't worry about anything. Just tell yourself, okay, I credited something in the journal, so I credited in the ledger, okay? So they got a gain, and the gain is 4,000. And then when you look on step 3, again, capital is not involved. So that means that that's it, right, in terms of the balance. So at the moment, we know that Farley is owed 26,000, right? Because Farley has a 26,000 positive plus balance, okay? And in order to pay Farley out, we will have to take some cash to pay Farley, but Farley's balance has to go down to 0. So we will have to debit the capital account in order to distribute the cash to the partner, okay? So here you can call it cash received or something like that, that's going to be 26,000, right? So it's a debit. So I already know with all of my capital, all my partners, the capital account will be debited for that final distribution. Green, we haven't calculated yet what green is owed, but we know that the payout is going to be a debit because we need to get rid of the capital account because the partnership is no more. And the credit is to cash because cash is going down. All right, cash goes down to pay out these partners. So Farley is 26,000. Questions there, anybody? We're still working through the rest of the calculations, but does anybody have something that they need to ask me already?
So you close the entry?
What do you
Kind
mean?
of,
Close the capital account?
kind of, yeah.
Yeah, not even
And
kind
that's
of.
why you
You're-
debit it.
Yeah, it is. I mean, it is a closing entry, not in the classic sense, but I know what you're saying because it's gonna go down to zero. Absolutely. Yeah, I'm
Okay,
closing
Well-
the account.
So Professor, we have to do that for all of the other capitals or
Yep.
just for Farley?
No, for everybody, because the partnership is ending. I just took Farley right through to, to show you how.
Since he was first. Okay, got it.
So let's do green. Right?
It's a lot of steps
No kidding.
to remember.
No kidding.
Okay.
I feel your pain. All right, so same story here. You guys can work along with me. This is green. Green's capital. Okay, so again, the question told us that the beginning, essentially the beginning balance before we did any type of liquidation transactions was 22,000. This is going to become repetitive now, okay? Because all we're going to do now is go up and see where green is mentioned. Green's mentioned over here as a credit, right? When we had the gain. So you're just going to go right back down, just like we did with Farley. You're going to put a gain and it's 2,400, right? So yes, it's a lot of steps to remember, but when you actually know them, you repeat the same thing, right? Multiple times. So at least that, I guess that helps a little bit maybe. And so now we have a balance for green that has to be paid out of 24,400. So you already know that it's going to kind of be the same thing, right? This is the cash that green is going to receive. It's 24,400, so that they can end up on a zero balance. So it's a little bit back to front because normally we would do the journal entry and then the ledger or T account, but I'm using the T account to help us better understand why the partners' accounts are being debited, right? When we close out the partnership, because everything has to go down to zero. And then the last one is whole. And so I'm going to give you guys, let's say 3 minutes or so to do wholes capital. You should know how to do it, whether you're doing it in your mind or on a piece of paper. Just take 3 minutes to do wholes capital, just so you can be sure that you actually know what's happening, that you're not just saying yes, 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 because I'm doing it on the board, so it looks easy. Okay, 3 minutes to do wholes capital. Sorry, I was on mute. Michelle, you ready to answer?
Yeah,
Okay, so just give me like another minute or so for any
Okay.
stragglers. I'll call you as soon as it's time, okay?
okay, sounds good.
All right, Michelle,
Okay,
go
so
ahead.
for balance, it's going to be 22,000.
Yep,
And then for gain, you're gonna input 1,600.
yeah, that's from the journal entry.
So for cash received and balance, it's gonna be 23,600.
Yep. And then the ending balance is zero,
Is-
right?
Mhm.
And what am I gonna do in the journal entry for this?
As far as,
Just put in the
yeah,
23,600.
so that's gonna be 23,600.
Yeah,
yeah.
debit. And then the cash number, you can basically just add up whatever you paid these people. And that has to be the cash that's paid out. Now, do we actually have this amount of cash? I don't know, but that's, what the cash amount comes to, 74,000 based on what we're paying everybody out. So let me show you why this works with cash. Let me see if I can just do cash on the side here, so I don't lose the other work in case people are still copying it down. So cash, you take right from the start. Okay, so the cash account is debit, is credit, it's an asset, so up on the debit, down on the credit. You may recall initially, the question said that the cash number was 11,000, right? So the opening balance for cash is 11,000. Then we received from the sale of all those items, we received, if you go back up, 72,000, right? Debit cash, 72,000. So, oops, sorry. So I'm going to put in a debit to cash of 72,000. Then we paid cash of 9,000 with the liabilities, right? So paid 9,000. So when we add this up, now you're gonna ask me, do I need to do this? I don't think Wiley asks you to do this, but I'm trying to prove to you that we do actually end up with everything on zero. Okay, because the only open question mark was where the cash actually ends up zero. So we add up the 11,000 and the 72,000 and we subtract 9,000, right? And so it comes out miraculously, right, to 74,000. And so over here, this is when we pay the partners, right? Pay the partners, it's a credit. We're taking it from this journal entry over here. We paid them 74,000. So it must then mean that cash at the end of this whole business of liquidation is in fact also going to be zero. So every account in the partnership has ended on a zero balance. Any questions? All right. So I'm just gonna stop the share for a second here because I just need to make sure that I have, I know people are coming in and out with attendance. I need to make sure that I've got all the attendance. I also saw some messages for me on the chat that I wasn't able to. Oh yeah, okay, Scarlett, I already marked you present, so you're fine. But there may be others that, I know there's been a whole mess today with people's internet. So just let me, just give you guys, just stretch your legs or your lines or whatever. Let me just take the final round of attendance to fill in any gaps of anybody that I didn't see come in here. Is Yadira here? Yadira Ortega? No. Ivan? Is Aneta also not there? Walter? Thank you. All right. So,
Professor, did you call me?
yeah, I got you. I got you.
Oh, okay, no, I could have sworn I heard my name. That's why.
No, I didn't. I was calling someone else. It was Yadira or Taylor.
No problem.
I couldn't see her on the list. All right. So no one else seems to have any questions. I'm just making sure again that this person is not actually no one else has questions around this liquidation. Is that true?
Professor, where can I get these notes that you're writing? Like all the answers?
Yeah,
Like-
yes. Okay, so I've shown it before. I'll show it again. It's here. This is the document that I'm using right now. While we're on Zoom.
Oh,
And
okay.
if you want the actual formal answers, I can move them, I can paste them here also. I've done that for chapter 13 already, but they're actually just right here. Under additional notes and exercises, all the solutions are there.
Mhm.
Yeah, so, but if you want to see, because when I do it in class, there's sometimes extra little things that I do on the side and whatnot. That's this document over here. Is Lewis here today? I don't see your name, Lewis, and I'm trying to make sure that I'm not missing people. Yeah, I didn't see Lewis today. So Yadira's not here. Ivan, I haven't seen Walter or Lewis. Okay, thanks. Right, so let's move on to example 13, which is the last example. And this one does, this differs from number 12 in a few ways, in that in this example, right, instead of just getting the information as like just written in a paragraph, you're actually given a balance sheet that shows you, all the balances, but that's, not a reason to become concerned, because it's basically telling you similar things to what we just worked through above, just in a different format. Okay, so here again, there's some information given, and then you're told that you have to make the journal entries for the liquidation and show the partner's capital accounts. So you're told that they already have cash of 5,000, and then these are all, the non-cash assets. So we're going to follow the same approach in step 1 that we did before, where we will sell all the non-cash assets. The only difference is that we actually have a complete depreciation account. So I will show you in the journal entry. The accumulated depreciation is written as a negative balance here because it's a subtraction from the equipment to show how much of the equipment has already been used. And also it normally has a credit balance because it is a contract asset. So when we sell the asset equipment, the accumulated depreciation will also be eliminated, but because accumulated depreciation normally has a credit balance, we will have to debit the account to get the balance down to 0. And then on the other side here, under liabilities and owner's equity, we've got notes payable and accounts payable. So notes payable is also a type of liability, right? So when we do step 3, where we have to pay off the liabilities, we'll have to pay off both of these liabilities. And then you've got the 3 partners' capital balances. These would be the beginning balances before we take into account anything to do with the liquidation. The partners of Ace Company agreed to liquidate the partnership on the following terms. The partnership sells its non-cash assets to Jackson Enterprises for $75,000 cash. So this is similar to what we had in the previous question, where they told us that the assets were sold for $72,000. So $75,000 is the cash we received from selling accounts receivable, inventory, and equipment. And then it says that the income ratios of the partners are 3:2:1 for Arnett, Carey, and Eaton respectively. So this you're going to use to split if there's a gain or a loss on the sale of the assets, right? So you can add this up and you see 3 plus 2 plus 1 is 6. So one partner gets 3/6, the other one gets 2/6, and the last one gets 1/6. You can also make this into percentages if you want to, obviously. Sorry, that's not the, I mean, this is pretty obvious, right? 3 out of 6, if you want to make it percentage, is going to be 50%, right? 2/6, 33 1/3, so a little bit messy, but that's how it looks. And then 1/6, right? So, you know, you could do the percentages, or the fractions might be cleaner to put into a calculator, whatever works, but that's how the percentages line up, okay? And yeah, I don't know why it's saying you can now see my screen. I'm assuming you will see my screen all along. All right, so let's go in and start doing the journal entries based on the steps for the liquidation, and then we'll see how all these percentages and things factor in. So example 13. Gonna make the journal entries here, debit, credit. Say step 1. So step 1, sorry, is going to be the sale of all the non-cash assets for cash. So I know from the question that I am receiving, or we are receiving 75,000 cash. So we can start with that, debit cash for $75,000. And then we have to start crediting all the assets, right? That we sold. We're basically, just to go back in case there was any confusion, we're basically doing the same journal entry as before, right? The only difference is that we're going to have to handle accumulated depreciation as well. So going back to the question, you'll see that there's accounts receivable. So accounts receivable of 15,000. We also have inventory of 18,000. I'm taking the stuff straight from the question, okay? And then equipment of 35,000. And so we've managed to eliminate the 3 non-cash assets, but we also have this contra asset, accumulated depreciation, that since we're selling the equipment, we also have to remove accumulated depreciation from the books. So as I said before, accumulated depreciation is a contra asset. It has a credit normal balance. So in order to get rid of it, we have to debit the account. So I know my debits and credits are not in order, but I'm kind of working this through as we go along. So accumulated depreciation, should have normally put under cash over here, but it's okay. I'm putting it here now. Accumulated depreciation of 8,000 debit. That's to make the balance 0, because the balance was 8,000 credit. Now I'm going to debit it, so the balance is 0, which is correct because we no longer own the equipment. So we shouldn't have the accumulated depreciation on our books. Questions on that, because it's new? So anybody need me to clarify anything?
The 75,000, it's the realization.
That's the cash that you received when you sold the stuff.
Yeah. So what
Mhm.
about the 5,000?
That exists from before when the business was running. It's
Yeah,
it's the
but-
same as the 11,000 over here. You don't record it again because it's the beginning balance in cash from previous transactions. It has already been recorded.
It was recorded already?
Yeah, think about if you go onto the app for your bank account right now, okay? And you
Mhm.
open the bank account app and it says that you have $10,000 in your account. That's the total of all the transactions that have already taken place up to that point. Do you agree?
Mhm.
And now if you take your check from your work and you deposit it via your phone and your check for work is $2,000, that $2,000 is a new transaction, but the 10,000 is separate from that because it happened before. So when you deposit the $2,000 check, it's just gonna be for 2,000. It's not gonna be for 2,000 plus another 10,000, all right? That's not how this works. So the 5,000 that you have here is the beginning balance on cash that relates to all the cash transactions that took place before the date of the liquidation.
Yeah.
So you don't record it again because it's got nothing to do with this transaction. So after this transaction, maybe this will help you more. After this transaction, the total cash that they have is 75,000 plus 5,000, which is
Okay.
80,000.
Yeah, I'll see it later, I guess.
Sorry? Oh, yeah, when you
Yeah,
do the
I'll see
cash.
it later. Yeah.
Yeah, I mean, you don't have to postpone your question. If there's still another question, you can ask it. Let me take Shafak. Yeah. Shafak.
I wanted to know what exactly does accumulated depreciation mean?
I can barely hear you. What are you saying?
Well, can you hear me?
Yeah, I can barely hear what you're asking me. You said, did you ask what does accumulated depreciation mean?
Yeah.
Yeah, so it's the account that shows the amount of the asset that is considered to be used in the business up to that point. So depreciation is the use of the asset, and accumulated depreciation is recording the depreciation expense for each year. So what we're saying is we bought this asset for 35,000 and we're treating it obviously as an asset, so we debit assets, but over time we use the asset, okay, and that creates an expense because the definition of an expense is the cost of an asset consumed, right, amongst other things, but it's the cost of an asset used. So every year, the company creates depreciation expense because it's using up the asset, but it doesn't put that expense onto the equipment. It keeps it in a separate account called depreciation. So if you wanted to know how much, let's ask this question, how much of the asset is left to be used, right? You will say equipment 35,000, and then you'll say accumulated depreciation 8,000. And what you do is you say 35,000 is what we started with. We used 8,000, so there's 27,000 left net. So the accumulated depreciation is showing, what was used up. I'm hoping that this is answering your question because
Yeah, thank you.
Okay. So that's what was used, and it's the nature of the account, contract asset. I don't know if you guys remember this from before. This is all chapter 3 and chapter 10 of accounting 1. Contra assets, so it increases. Sorry, I am trying to. So it increases on the credit side and decreases on the debit side. So the reason we debit accumulated depreciation over here is because we're decreasing it because the asset is also decreasing because we're selling the asset. So the balance for accumulated depreciation goes down to 0. Other questions? Yeah. Okay, so where are we now, right? On the debit side, we have the 75,000 and we have the 8,000. So we're coming up to, what is this, 83,000. On the credit side, we have 68,000. So it looks like, again, on the credit side, we need some extra amount of money. So remember I told you a credit is a gain. So the way I can calculate this, if you want to, I can say, well, I don't even need parentheses. I'm going to say 75,000 plus the 8,000 minus 15,000 minus 18,000 minus 35,000. And so my gain is 15,000. And why do I know that that's how I have to calculate it? Because the dollar amount of debits and credits have to equal. All right, the dollar amount of debits and credits have to equal. So my gain on sale is 15,000. So that both sides of this journal entry add up to 83,000. Okay, so the next step now is going to be the same as before. We are going to allocate the gain between the partners. Remember, we did this before over here in step 2. We debited the gain and we credit each of the partners. Same thing, it's just a different dollar amount of the gain, so that's fine. So we say gain on sale, and we know that it's 15,000 that we're going to debit. Now we have to put each partner's name, right? We're going to give these gains to them, so their partners' capital accounts are going to increase. So R are nets capital, P carries capital, and W Eaton's capital will all go up in their ratios, right? In their income ratios. So remember, we calculated the income ratios over here, 3/6, 2/6, and 1/6. So that's what I'm going to use here. Okay. I'm going to give this person 3/6. I'm going to give this person 2/6, and I'm going to give this person 1/6 out of 15,000. Okay. So that comes out to, if you do the math, you see that this person gets 7,500, which is obviously half. Then it's 5,000. And then it is 2,500, because you're saying 15,000 times 1/6, or 1 divided by 6 times 15,000 on your calculator will give you 2,500. Questions on the split? Make sure I'm not missing questions on the chat. And that's to allocate the gain.
Oh, and now I realized why you didn't put the cash in the beginning. Because the first step was to record sale of non-cash assets.
Yes, non-cash. That's what I also said earlier, but we can't, remember I said, can we sell cash?
No, like I understand what you do, but sometimes I just ignore what exactly like the question is. Like,
Yeah,
what are we
it's
supposed to
fine.
look for?
We're
And
human.
Like that's why I'm like, I didn't even realize I know what you're doing with like debiting and crediting the cash and the
Mhm.
different non-cash assets, but I
Yeah,
was like, oh,
because
but
you,
what are we trying to look for anyway?
yeah, non-cash, that's what you're saying, right? The penny drop, non-cash assets. Mhm. Yep, and remember, it takes repetition. Have compassion on yourself, it will come, all right? It's just sometimes it takes at least 2 times over to see what's happening, and obviously practice and so on. Okay, good. So the next step, as we know, is to pay the liabilities in cash. From this question, we have more than one liability. We have notes payable and accounts payable. I'll repeat what I said before. No, the liabilities are normal credit balances. In order to pay them, you have to debit. Remember, I showed you over here from the previous example, to pay the accounts payable, it was a debit. So we will debit each account, not together, because they're separate general ledger accounts. So we debit each account and then we credit cash. All right. So we're going to debit notes payable for 15,000. And then we will also debit accounts payable. Sorry. For 16,000, and then we will credit cash for 31,000, just the total of the two numbers. And this is to pay the liabilities go down on the debit side. And now we know already from the previous example that in the 4th step, we will debit each partner's capital account and credit cash, right? So I'm already just going to put their names in, because I know that each partner is going to be debited, because we're decreasing their capital accounts to pay out the amounts of money to them. P carries capital, and W Eaton's capital. All right, and we know that the credit is to cash. How do I know all of this? Because I just did it above here. Okay, and we're not dealing with any type of deficiency. This is the same thing that we're just doing. Obviously, the amounts are going to be different, right? So now the question becomes, what are those amounts? We know that we can, draw out every partner's a capital account and calculate to see what the amount should be, or you could just do a rough calculation. I'll just do the T accounts one more time, right? So everybody's kind of comfortable with them. I can't remember if the homework asks you to do T accounts or ledger accounts or what. I just don't remember, but if it is a ledger, the debit and credit sides, you know, in terms of what goes on each side, it's the same thing. All right. So we know that that it's capital accounts. So the normal balance is on the credit side. What are those balances? They were given in the question, right? 15,000 for Arnett, 17,800 for Carrie, and 1,200 for Eaton. So I'm busy with Arnett. So I'm going to put the balance, right? 15,000. Notice that this is the same rhythm, the same thing that we just did for the previous example for the partners' capital accounts. This is why if you are disciplined enough to practice in accounting, you can actually get very good grades because the questions often just mimic each other. They're the same. So we've got the balance and then we're going to check for the gain, right? This is the only time where Arnett's capital account is mentioned in the journal entries. So we need to credit Arnett's account with 7,500. So that's the gain, 7,500. If you have to go back up, I'll just show you quickly. Sorry, I didn't mean to do that. If you go back up to these other partners that we were dealing with before, same thing, right? The balance and then the gain on the sale. So our net, if we go ahead and add up these two numbers, they're on the same side of the account, so they get added together, 22,500. So we know that our net is going to get paid out 22,500. And this is going to be the cash paid 22,500 to get our net's capital account down to 0. Any other clarification questions on the capital account? Hopefully we've now beaten the dead horse, right? We're good. Okay, so next is carry. Let me give myself some space here. So next is carry, same deal. A balance for carry of 17,800. Let me just double check that I got that right. Yes, 17,800 that was given in the question. The gain for carry is coming from the journal entry. It should be 5,000. Yep, it's 5,000. So we're gonna just copy and paste, right? You don't have to change anything. You still credit the account with the 5,000. And now we're going to add up to see how much carry should be paid. So the balance on carry's account before the liquidation payout is 22,800. So 22,800 is the payment. I'm going to finish up this because I'm kind of answering the B part as I do the A part, right? Because the B part asks for partners' capital accounts. So I'm just going to finish this up so that I know I got my points for B as well. So that's Carrie's account, and now we go to Eaton. So what is Eaton's initial? So W. Hopefully, again, the repetition is helping people who may have lost us somewhere along the way. Some other people may be fast asleep. That's okay if you already get it. Balance 1,200, right? Gain. Where's the gain? Here we go, 2,500. Okay, so gain is 2,500. So my balance to be paid out, I see a something on the chat, I'll check you out now, is 3,700. I don't know why the chat is like. Okay, the chat like opens huge now. Opens, I'll look at the chat at the end. I don't want to distract from what we're doing. So the balance for each is 3,700. 3,700. And cash paid 3,700. So the new balance for this partner is 0. So we closed out the partner's account. So we have all these amounts on the debit side that comes to 49,000. So if we add these up, that's what should be paid out of cash, 49,000. All right. So now the question is, did we actually have 49,000 in cash? And this cash question was also kind of what C was talking about with the 5,000 at the beginning and all of that. So let me torture everybody for 5 more minutes, right? And do the cash fee account. No, you're not being tortured, but you all love accounting. I know. So cash is an asset, goes up on the debit, down on the credit. So the beginning balance for cash, and see, this was your issue with me, or not with me, but with the cash. That's the beginning balance, 5,000. So you put balance 5,000. Now you go in and see what other cash you have. So the first entry on the journal entries is to debit cash for 75,000. So that's exactly what we're gonna do. We had that sale and we got 75,000 in cash. And then we know, or we should know by now, that the next entry is going to be this credit to cash of 31,000 to pay all the liabilities, right? So we paid credit, 31,000. So if you, pardon me, if you do the math here quickly, you will see that cash, this thing wants to jump ahead of me. That's nice, but I want to do it step by step. We add up the debits and we subtract the credit. Oh, look at that. The balance on cash that was available to be distributed was in fact 49,000. So now we paid partners 49,000 per the journal entry that I just did. So it must then mean that even cash, which is the last balance standing, right, is 0. And 0 is what we want because the partnership is liquidated.
So, Professor, everything is clear, but I was just wondering, so the last 2 steps are closing entries for capital and cash? What exactly
Yeah,
are we
so
doing?
they're not closing entries in the pure sense of remember, the pure sense of closing entries is closing revenue, close expense, transfer net income, close drawings. That's the pure sense of closing entries. This is closing in the sense that the business is closing.
So if I want to title it, how will I title it? Like
Liquidation,
closing?
liquidation entries, liquidation.
Because I know like the first
liquidating
step is
capital.
it was to record sale of non-cash assets. The second one was to allocate the gain between the partners. The third one to record payments of liabilities. And then 4 and 5, how should I title it?
Where do you, what are you calling 4 and 5?
4 was the one with the capital that we credit.
Yeah, so this is step 4, right? There are only 4 steps. I mean, the cash thing, I'm just proving to you that what we are saying is being paid out in cash, actually, that amount actually exists.
So it's cash transactions, kind of.
Yeah, cash transactions is a good way of calling it. Yeah, yeah. I mean, it's the cash ledger, but cash transactions is fine. So this over here, more often than not, you may not even be asked to do the cash ledger. You're just being asked to do the partner's capital. But I feel like people will say, okay, so you know it's 49,000, but how do you actually know that you have that money? Because there was already confusion around the beginning balance of cash and how much cash we got from the sale of non-cash assets. So I'm trying to show you that everything actually does work in the end, and that all the accounts are gone when we're done. That's how you check your work.
Perfect. Thank you.
No worries. Anything else? I know someone wrote here, which I totally appreciate, that you're trying to wrap your head around. No questions yet, trying to wrap my head around it, just trying to get fluent in it. I get it, guys. It's, this is why you're in the class. This is why the thing is recorded. So maybe, you can go back and just check something out.
Yeah.
Yeah,
It's
please.
because I'm so much of like a visual learner. So as I'm looking at it, I'm like, okay, this is next.
Yeah,
Yeah.
so please don't feel bad if you are not grasping everything immediately. That's normal. You just want to go and do the work yourself so that it can sink in. There's no way that me speaking on the Zoom call for 2 hours will just mean that everybody miraculously knows what's going on. I'm not insane to think that, and you guys certainly shouldn't feel that way. You have a part to play in practicing the work, and my role is to try and, I guess, share the rules and show you how to do it and try to be available for questions. But there's definitely more repetition that is always needed in accounting. So at least now you have everything that you need, to do the homework questions. We're done with partnerships. We'll end it here. I'm not going to talk anything about chapter 13 today. We're on schedule, as far as I recall. So today's the 23rd. So we're just done on time. And next time on Tuesday, when we come together, we'll start chapter 13. But Tuesday is also when your chapter 12 homework is due. Please be mindful that the homework carries a large weighting in your this always happens in your grade. So I just want to remind you that all the homeworks together are 30%. Each homework is 5%. This is not okay. This is not something that you should be ignoring, because if you don't do the chapter 12 homework, you've already lost 5% of the overall grade grade in the class. I just got a note from someone that the Zoom materials of chapter 13, they're having difficulty opening it. It is an Excel sheet. I also did download it in this computer that I'm using, which I don't always use. So it's possible that maybe something is problematic there. So I can re-download it and repost it, but also just check your own computer that the issue is maybe with you. HP desktop with Microsoft, I'm sure. Right? Yeah, I don't know either. I suspect that there may just be some glitch maybe with my document. I'll do it on my Chromebook again, and it will probably be fine. Okay, guys, so I'm gonna stop it here. I don't have much else to share right now. Let me know if someone has questions in the last 5 minutes. Otherwise, you're dismissed. Go and have a lovely day, a lovely weekend. Watch out for the weather this evening. And I'll see you on Tuesday. Do not forget to upload your vaccination records by Monday.
Thank you, Professor. Bye, everyone.
Professor. Bye-bye.